We're not just going to look at a system today. We're going to descend into it. And look, this isn't a story about some stranger. This is a story about you. It's about what it actually costs to operate inside the architecture of capital. Let's dive in.
Okay, so you see this number on the screen, $847 million. Its a valuation, it feels completely abstract, right? Almost impossibly large. But your job, your only job, is to make it real.
And this is the very first rule you learn, probably on day one. You're the custodian of this number. You're the technician. All of the pressure is on you, but none of the ownership is. You're just the hands. So what does that feel like? Well, your reality shrinks to a glowing screen in an office that's dead silent. That pitch book? It's due at 6 a.m. Your coffee's gone cold, and the entire weight of that $847 million deal is resting on your shoulders, on your ability to just stay awake and get the model right. This is really the first stage of your transformation. See, the firm doesn't care about your personality. It doesn't care about your dreams. It just needs your output. You become a function in a much, much larger equation. Your whole life just becomes a series of deliverables. You're building discounted cash flow models, you're running comps, you're drafting memos. You tweak a discount rate by, 50 basis points? And you watch valuations swing by millions of dollars. You're learning the mechanics, one spreadsheet at a time. And here's the cost, right? This is the down payment you have to make. And everyone tells you, oh, this is normal, you're building a foundation for your career. But what you're really doing is you're trading pieces of your life for proximity to capital. So you get through it, you get promoted. The work itself, it doesn't change a whole lot. But your perspective, that totally changes. You're starting to see past the numbers and into the unwritten rules of the game. And your compensation changes. This isn't just money, it's validation. It's the first real, tangible reward for the trade you made. You start to breathe a little differently. You're not just an analyst anymore. You're an associate. You're finally on those client calls you used to just prep for. You don't speak, of course. You just listen. And what you realize is that those complex models you build, they're just tools. The real work happens in quiet conversations built on trust that was forged years, even decades ago. And then the first real test comes along. You're working on an acquisition and you know it's overpriced. You can see the flaws in the logic clear as day, but you keep your mouth shut. The deal closes, the bank collects $12 million in fees. And just like you knew it would, 6 months later, you see the news. The acquisition is a dud. It's underperforming. Jobs get cut. Value is just destroyed. But for you, it's all happening at a distance. You're completely insulated from the fallout. But here's the crazy part. This isn't some moment of moral crisis for you. It's actually a moment of clarity. It's like, oh, this is how the machine works. It's not about what's right or wrong. It's about understanding the incentives and just playing the game. So you move up again. You leave the bank, you head to private equity. Now you're not advising anymore. You're actually deploying capital. You're the one calling the shots. And with that, you learn a whole new language. Just look at this process. It's so clinical. You acquire, you leverage, and then you insulate yourself with words. Right sizing. It sounds clean, efficient. It definitely doesn't sound like 800 people losing their jobs. The language itself becomes a tool, a way to manage not just the assets, but your own detachment from it all. And that distance, it's not just professional anymore. It's personal. Those connections you had to your old life, they start to fray. And you barely even notice. It's just another cost. You've filed away. Okay, now you've reached the highest level. Individual deals, they feel small. You've stopped looking at the individual pieces on the board, and you started seeing the entire board itself. You're not just playing the game anymore, you are seeing its architecture. So what does access even mean at this altitude? Well, it means you don't lobby finance ministers for favors. You call them to discuss global capital flows. As an equal, you're part of the system's core infrastructure now. This is what foresight looks like. And no, it's not insider trading. It's about understanding the fundamental structure so profoundly that you can see the ripple before the stone is even thrown. You see the pressures building, you know the logical outcome, and you position your capital accordingly. Your thesis on that sovereign bond? It turns out to be correct. Your fund makes $380 million in 1 week. I mean, that's a sum that would change the life of pretty much anyone else on the planet.
And your reaction to this monumental win? Nothing. Absolutely nothing. It's not joy, it's not relief. It's just confirmation that your analysis was correct. The categories of happy and sad dissolved a long, long time ago. Now there's only positioning. And this brings us to the final calculation. I mean, if the money doesn't make you feel anything, then what was this all for? What was the point of all those 19-hour days, the lost friends, the compromises? And here it is, the final truth of the matter. This was never really a story of loss. It was a transaction. You, consciously or unconsciously, exchanged the core elements of a normal human life for something else entirely: proximity to power and a deep understanding of the machine.
And the cycle? Well, it just continues. Right now, in some glass tower downtown, a new 23-year-old analyst is logging into their terminal for the very first time. You know they're feeling that thrill, that ambition. They are at the very beginning of the exact same path.
He is absolutely convinced this is all about the money. But you know the truth, don't you? You know the real prize and the real cost is just becoming another part of the machine itself. So why do you think he's already wrong?